Filippo, thank you for joining us in this special interview. And let's start in with your reading for this year. We're at the beginning of the year, and you sit at the center of global capital flows. What is the single biggest shift you are seeing in global banking today, geographically and also structurally?
Thank you very much, Fatima. It's a pleasure to be here in Riyadh with you. So 2026, in our mind, will largely play out most likely as the last 4 or 5 months of 2025. 2025 started with big expectation, then for a variety of different reasons, some of those expectations of deal making did not materialize for the first, let's say, 8 to 9 months of the year, but then the last quarter of the year, things picked up very strongly. Large deals came back on the M&A front. We just need to think about EA or Warner Bros. And Netflix, or some other transactions that happen on the IPO side. So we expect, to a certain extent, 2026 to be a continuation of that theme, whereby deals will be at the forefront, large transaction will be possible, some cross-border transactions should be doable for a variety of different reasons. One, financing costs are still very low. The credit spreads are at the tightest ever in the history. There is a large backlog of transactions that we have been working on now for months, if not years, that most likely will come to market. And then I think there is a sense also, especially in the US, that the deregulation will facilitate transactions that otherwise might not have been possible. So all in all, we expect the year to be exceptionally active. In terms of themes and geography and industries, I would say for sure tech, healthcare, infrastructure, probably energy too, will be most likely at the forefront. And of course the United States, but also Europe and the Middle East will most likely be very active.
Geopolitics have been the breaking news since we kicked off 2026, and it is increasingly intersecting with finance. Venezuela is a clear example. From a global banking perspective, how do you assess today sovereign and country risks in markets where politics can quickly override economics?
Before moving now to New York, I spent 12 years in Asia. And you quickly realize that every time we operate outside of the United States, as a firm, we are host, we are guests, in the countries in which we operate. And therefore, we have learned to that the geopolitical winds at times blow in one direction, at times blow in a different direction. So what is important for us is that we don't react too quickly in one sense or in the other, but we try to form a long-term strategy that makes sense for our clients, for the communities, for the stakeholders, in the countries in which we operate, and try to follow that strategy over the long term. We have never left any country since ever, because whenever we enter the country, it's not that you enter and then if you don't like it anymore, you can exit. You bring a commitment to the clients, to the employees, to the local governments that you cannot rescind.
Are we underestimating how geopolitical changes or sudden changes can actually affect capital outflow in emerging markets?
I think the markets are not properly pricing the geopolitical risks globally. That I agree with you. Whether those geopolitical risks will have a disproportionate impact on emerging markets, honestly, I would not be able to say. I think there is an overall statement that the markets right now, especially the equity markets, are pricing things to perfection. And every time you price things to perfection, every bump in the road can have an impact. In that sense, geopolitical risks are probably at times not fully priced. In emerging markets, in certain countries, things could go in a direction, in other countries could go in a different direction.
How do you assess the impact of what's happening in Venezuela today on oil prices?
It is too early to say. In initial assessment that was that the impact was going to be limited, and that's the research that we published at the beginning of last week. But as things become clearer and things will play out in the next few weeks and months, they might have a slightly larger impact than we currently understand.
On the impact also on investments from US oil companies. Most of the US companies have sat down with Donald Trump, and they've all agreed that going back to Venezuela necessitates a huge amount of investments. And the current reports are saying they need probably around $100 billion. If we're talking about increasing production from 800,000 to what it used to be, around 3.5 million barrels a day. Is that doable today, considering the carefulness of how these companies have shared their opinions for the past few days?
I would go back to the point I made. It's a little bit too early to assess the situation in Venezuela, which I think is still largely developing. And therefore, right now it is premature, I would say, to just make an assessment. Things are not stable enough to be able to say, will there be an opportunity? How much will that cost? How should we consider it? The impact to neighboring countries, and so on and so forth.
So you don't see an immediate impact on oil prices, considering the situation
for
today?
the moment, we believe it's too early to assess, and therefore we don't think the oil price will react.
Will that apply also to impact on US economy, on US markets, even investors being quite confident starting the year with such breaking news?
Yes, if you look at it, the markets barely reacted. So the US economy is definitely doing still very well. It's still exceptionally resilient. And rates most likely, we saw the labor report last Thursday, which was surprisingly very strong. So we think the rates probably will remain stable in the US. We think the rates will remain stable in Europe too. So there is a sense of stability that is kind of coming along for the rest of the year that should be positive in terms of ability for deal making. When it comes to the US, inflation has not yet gone back down to the 2% original Fed target. It's still lingering around the 3%. There are questions of whether some of the trends that we are witnessing are inflationary in nature. And therefore, is there a risk probably that doesn't play out this year, but we could see more in 2027?
What kind of risks?
Related to inflation, that inflation comes back. Is that something that currently we are not seeing, but towards the end of this year, beginning of next year, could we see inflation coming back up a little bit? That's a question. On the other side, oil prices coming lower could be positive from an inflation standpoint in the US. And the other question is productivity-led improvements coming from AI are not yet fully priced in.
So do you think that we are still entering a more predictable interest rate environment?
For the rest of the year, yes. We think we started the year with a view that there could have been a couple of cuts. At the moment, we seem to think that probably the Fed has done its course.
Should CEOs prepare at some point to higher for longer at some point mindset?
The higher for longer mindset is something that we have on the back of our minds because of a variety of trends that we are witnessing, whether it's the deficit the US is currently running, whether it's other global consideration, natural bias of treasury versus others, and so on and so forth. It will not play out this year. It is something that will probably play out later in the course of this decade.
Powell mission is about to end May this year. 4 or 5 names are at the forefront of who's going to be leading the Fed in the next few years. Who do you think is most suitable?
I honestly don't have a view.
Who's the markets?
I would never dare to comment. It's for you to make suggestions. I don't have a view.
How is Do you think the current situation when it comes to rates, lending, and the whole finance capital flows reshaping corporate borrowing, especially when we talk about M&A appetites?
So what you have witnessed over the last few years is the growth of the private lending, private credit initiatives, which definitely play a role, important role in sense of providing capital to borrowers that might be otherwise might be impossible for them to borrow. Mm-hmm. So there has been definitely a development in the U.S. of these opportunities for financing that are outside of the traditional banking sector. This is one of the things, like for JPMorgan, we have announced last year at the end of January our $50 billion direct lending initiatives, which comes on top of the 15 billions that we have already done. And therefore, our strategy, for instance, in facing clients is to offer them an holistic approach, mm-hmm. agnostically, in terms of we can do anything that you need as a client, from a direct loan to a syndicated loan to any other form of capital raising that could be helpful for you. There is definitely, in my opinion, there is a trend which is private and public markets are coming closer together compared to the way we used to think about it in the past, which was a little bit black and white. Mm-hmm.
Filippo, you've mentioned earlier that you are expecting some deals to take place that started in let's say the second half of 2025 to actually materialize this year. What will truly unlock the next wave, the real next wave of global deal making?
So I would say part of it is already unlocked with the ability to do large deals, large transactions. I think electronic cards is the best example of a large deal which we singly underwrote the debit component, and that transaction has important Saudi investors too. So the ability to do large deals, the market has accepted that is doable, and therefore I think that trend will continue. The reopening of the IPO market, I think it's probably one of the other important elements that should take place. Some IPOs happened in 2025. Probably it was in a smaller scale than we had originally expected. Mm-hmm. We believe that 2026 will be a year where the IPO markets could reopen for good, and we could see some large transactions come through.
When you say large transaction, what are we expecting this year in terms of M&A activity? What is the number that you might see happening?
If you think about last year was the second largest wallet ever in investment banking in history. The largest was in 2021, obviously, with all the things that happened during COVID. Last year was at around $120 billion. Last year was the largest at just over $100 billion. As things are trending right now, and as we look at the pipeline, it's foreseeable to expect that this year could be as big as or as close as to 2020.
So around 100 billion?
Probably bigger than 100 billion.
How do you see the US markets in this year? I mean, they've had a fantastic year. There was a bull going on, especially when it comes to tech stocks, AI-related companies. Do you see this continuing this year?
At the moment, yes. It is probably will keep leading the way in terms of deal making across the world.
Mm-hmm. Let's move to the Middle East, especially if we're talking about the region, Saudi Arabia and the Gulf. Saudi has become the magnet for global capital from JPMorgan's. And here I want to hear from your bank point of view, from JPMorgan's point, what is driving this shift? Are we talking about a structural reason or a cyclical reason?
First of all, we have been operating in Saudi for 90 years. We celebrated our 90th anniversary just before the beginning of the FII in November of last year, and it was a fantastic moment to kind of acknowledge how much the Saudi environment, Saudi economy has changed over the last 90 years. Mm-hmm. And now we have 150 folks in the office here, is our which will probably go to 200 in the near future. I personally think it's a structural change. There is a variety of reasons for it. Number one, the important infrastructure investments that are going on in the Saudi space are definitely shaping an interest, a global interest in this part of the world that unseen. I also think that there is a global South narrative. And from a global South narrative, I think that the Middle East could be the winner for a variety of different reasons. Ability to attract foreign direct investments, being appealing to the rest of the world, being logistically placed in the right place, geographically placed in the right place, and also the richness in natural resources. So I think it's a structural more than a cyclical change, and we are preparing it, and we are investing in the Middle East because we believe it's structural.
Do you think that global banks are adapted to have this, let's say, adapt a model that can be sovereign-led for a long time financing?
I think banks are, it's one of the things at times we criticize banks a lot as not being flexible, but I think we are really actually quite flexible as an institution. We can move and we can adjust ourselves to the clients and the realities that we are facing. So the answer is yes. I think that the interest for the Middle East is prompting, I assume, everyone, not only JPMorgan, to rethink about how to invest in this part of the world.
Filippo, CEOs today face a rare mix of pressure. Geopolitics, AI disruption, energy transition, a lot of risks. What is the most common strategic mistake you see companies making it today?
We overestimate the complexities and the impact of certain trends in the short term, but we grossly underestimate their impact in the medium to long term. So we make, at times I see, we meaning the business folks tend to make decisions based on short-term inputs rather than thinking about the long-term consequences.
AI and banking has become a very, very attractive subject, stories, articles to read, and they're everywhere. Where do you see genuinely AI changing decision-making when it comes to global banking?
So first of all, as JPMorgan has been deploying AI since 2012. Now, it has changed the way in which we operate, the way in which we use AI. Definitely, generative AI has changed more and more the way we think about it. And there is a component of agentic AI that now is coming into place. At the moment, as a firm, we have around 400 use cases where AI is used every day in the way we run the organization. It is aimed at achieving efficiency, productivity gains, ability to deliver better services to our clients in a much faster fashion, ability to absorb large quantities of data and drive to the conclusion exceptionally fast. So this is one aspect which I think is well understood. The next layer is how much AI can bring an increase in revenues by mining sectors, opportunities that otherwise we would not have seen, would not have expected.
How much do you think it will bring in terms of revenues?
We have earnings tomorrow, so I'm not at liberty to say in case the CFO says something.
Filippo, you've spent decades at the top of the global finance, and in a world defined by uncertainty, for sure, of what's happening on a geopolitical front, what is the most or the one leadership skill or threat quality that matters more than ever today?
I would say the ability, in my mind, the ability to see the interconnections around the various inputs that we receive, staying calm, don't overreact, read all the various inputs, and having the ability to match EQ and IQ in equal components.
Filippo Gori, co-head of Global Banking, JPMorgan Chase, thank you very much for this interview.
Thank you for having me, Fatima. It's been a pleasure.